Real Life Trading Pre-Market Day Trading Show. You're listening to the Real Life Trading Pre-Market Day Trading Show.
Good morning, good morning, good morning. How is everybody doing today? This is Jonny Guarco coming to you live on YouTube. This is the Real Life Trading Pre-Market Show. What is going on, everybody? How is it going? Hope you guys are doing stupendous, and woo! What an exciting week we got ahead of us. We got the free week going on. Whew, I'm so excited. How is everybody doing? Anyway, this is going to be an exciting week. We got our real life trading morning rooms open to everybody. It's free week. So those of you who are not part of real life trading yet, welcome, welcome, welcome. Loving having you on the team. So the way this is going to work, if you open your chat pane, you can see we got a bunch of people here already first thing this morning. We got a bunch of our staff here. We are going to be overwhelmed with questions and everything else. So if I skip over you, I don't mean to do that on purpose, but throw your questions out here. If I don't answer it, one of our staff will get to it. And if it's missed, just keep yelling at me, and I'll get it answered for sure. Wow. I can't say hello to everybody, but just off the top of the bat, Dale Ryan, Christopher, Albert, Chris, Matthew, Carolyn. Wow. Whew. Johnny Merck. Good morning. Good morning. Good morning. Lori, Lucen, Chris, Carol. Man, it just goes on and on and on. I can't keep up with it. Cedric, how is it going? Lovell, Steve. What is happening? How is everybody doing? So excited, man. I am so excited y'all are here. This is the beginner's room. So if you're an advanced trader, we actually have another room that you can go to. Or if you don't like me or get bored here, you can go to the other room. But yeah, this is our beginner room. Here we go a little bit slower, try to explain things a little bit more than the other room. The other room talks about all kinds of things, including options and credit spreads and all that. But here we're pretty much focused just on teaching. That's what our focus is. So yep, if you got questions, throw them out here, and we're going to go slow and deliberate and make sure everybody is tracking with us. Let me set up my screens here. I got to do a little bit of adjusting here of our screens, and I'll be good to go. There you go. So anyway, this is the beginner's room, and in the beginner's room, we're doing this strategy called the 10 EMA day strategy. So we'll be focusing on that. In particular, you can see my chart over here. Throw me a, make sure that I'm tracking, that you can hear me okay. Throw me a 1 if you can hear me, and let me know. Make sure, throw me an S if you can see my screen. Throw me an S. Okay, I just want to make sure that we're doing good here. Anyway, in the 10 EMA strategy, we trade these 6 stocks. This is what our focus stocks are. And we trade Apple, Nvidia, Tesla, AMD, Delta Airlines, and Roblox. Now, if you guys want me to look at another stock, I'll be more than happy to look at it. But that's what our focus is. And anybody here who's part of real life trading and or staff, we got a bunch of professional traders. Even though this is the beginner's room, we have, I can tell you right now, we have professional traders in here. for whatever reason, they like to be in this room. They like to be part of this. I call it the A+ team. We got a great group of guys and girls that we trade with all the time, and we help each other out. And so if me or one of the staff can't answer it, please, RLTers, please step up and help us out and answer any questions that you can. So anyway, back to the 10 EMA strategy. So yeah, we'll be focusing in on those. I'm going to be going nice and kind of slow, just so I can explain everything on my chart, get all the new people so they're tracking what we're talking about. First thing that we normally do is we go and look at the SPY and the Qs. That helps us determine kind of the direction of most of the other tickers, whether it's in the New York Stock Exchange or whether it's in the NASDAQ. So I begin normally taking a look at the indices and see how we're doing. Right now, if you look at my charts, this is the SPY. You can see we're pretty much now confirmed in a bearish market. So over the last couple of weeks, you can see we really coming down from 480 all the way down to 437. But when you really think about things, that's really just a nice little correction. If we go over here and look at the price range, we're talking about, that's about an 8.5% correction. So nothing to worry about, just a normal correction that happens in the market sometimes. So we're loving life, and we're loving the fact that we can now trade bearish. If you look at the SPY, you can see we're gapping down. Friday's close, excuse me. Sometimes I get a frog in my throat, so you'll have to excuse me. I have to take a sip of my coffee and take a pause here. Hold on one second. Whew, that's hot. So here you can see that we closed down here about 438-ish. Let me explain to you some of these lines also on my chart. So if you look up here, you'll see a red, blue, and green line. Those are my exponential averages. Those are my 10 exponential, 20 exponential, and 50 exponential average. And then this big red line here, that's my 100 moving average, simple moving average, and this is my 200 simple moving average. When you see any kind of orange lines on my chart, those are gaps. And the reason why we look at gaps is because they usually get filled, especially on the SPY. The SPY hardly leaves any gaps unfilled. You can see all these gaps over here that just got filled. And they also provide support, and depending on where they are, of course, in this case, this kind of provides some support sometimes. So usually we'll see, not usually, but a lot of times we'll see something come down and get filled, fill the gap, and then bounce up and take off. So Randy says, what are your shorter MAs? So the shorter time MAs are the 10, the 20, and the 50. Those are up here. The longer term MAs are, here's my 100 and here's my 200. So these are exponential MAs, and these are simple moving averages. So if you can see, my red lines on the chart are my support and resistance lines. And you can see the SPY is gapping down, big old gap this morning. You can see over here, pre-market gap. Down here, we got a gap down to about 430. You can see we closed at 430, almost 438 on Friday. So we're expecting a continued bearish look. You'll see on a lot of the tickers, like the SPY, when you go to the weekly chart, you got that 50 right down there where we're gapping to. So one would start to think, okay, that's down there where the 50 is, down here where support is. We're probably, this would be a great place for this thing just to come down here and bounce. You got a bunch of bulls that went long over here, a bunch of people buying right here. So potentially this would be another great place to buy again. If you look at anybody going short on the SPY, if anybody went short down here, their targets probably being this 200, this gap fill, and this support. So I'm thinking what we're going to do is we're going to look for SPY to come on down here to somewhere about 226-ish, and I'm going to be looking for a bounce. Let's go look at the Qs. I got to keep my eyeball on the time. By the way, I'm broadcasting live from Hawaii here. It's 4:11 in the morning, so I didn't see if my man, got my man Douglas KK here on vacay with his lovely wife. I think Douglas is here. He said he was going to get up, but wow, talking about dedication. The guy goes on, there he is, you got it. The guy goes on vacation and he still is getting up just to be part of this team. So it goes to show y'all, man, we love this team. We love this, I call it the A+ team. Steve says he's freezing in New York. Come on, visit, man. Come out here. And what it's about 72 according to my computer. It's nice and a little chilly for me. Anyway, let's see. So it's freezing in Florida. Wow. Ron, where are you at? Northern Florida? Doug is probably in a tank top and in shorts, sitting out on his lanai, waiting for the sun to come up. West Palm. All right. Yeah, this is 72. It's kind of chilly for me, actually. Probably have to wear a sweatshirt when I leave the house today. Anyway, we got the Qs. We got Qs. This is looking kind of similar to the SPY. You can see we closed up there about 352-ish on Friday, and we're gapping down now to 344. We have a small gap over here down at 323. Whoo, that's a tongue twister. Yeah, we got that gap down there, and probably a lot of people are saying, wow, that thing's way too far down there to get filled. Well, I don't know. It's within reason. If we come on down there, we are going to do about what is that? About a 20% correction. Remind you back in March of 2020, you remember this time we had about, I think it was about a 30% something correction. Oops, wrong doohickey. Let's see what that correction that was. So yeah, that was about a 30, almost a 31% correction. So is a 20% correction within reason? I think so. I don't know. But anyway, if you're not familiar with trading bearish, no problem. Just remember, it's exactly like going bullish. It's just that bearish trades move a lot faster than bullish trades. I learned to trade from Jerremy in a bearish market. Jerremy Alexander Newsome, CEO of Real Life Trading. And I can tell you, it is a blast. It is a big time blast. Very profitable trading bearish. So anyway, we may be trading bearish today. So we're gapping down. We're looking like we're coming down a little bit of a support area down here, about 340. So yeah. All right. Let's, Carol, don't remind you. All right. That's why, yeah, we got to put in our stops and we got to mitigate our risks. And we'll be talking all about that today a little bit. All right. Tracking time. We got to get on and talk about this 10 EMA strategy. So let me talk about this 10 EMA strategy a little bit, and then we can move on. This 10 EMA strategy, my lines are wrong place on my Apple. So these green lines indicate the high and the low of the previous day. So you'll see I'm going to have dark green lines on my chart, and I'm also going to probably maybe have lighter green lines on my chart later on, and those are going to indicate some targets. But first thing that we do is we indicate the high and the low, and you can see I threw in a trade there on Apple, but high and the low of the previous day. So what we're looking for is we'll go to the 10 EMA strategy chart, and you can see that big red line is my 10 EMA. So what we're looking for is really a retest of that 10 EMA when we do this 10 EMA strategy. So what we're looking for is this stock. It is a bearish candle. Actually, we had a bunch of bearish candles in a row on Apple, as we did in the bigger indices. So we have 4 bearish candles and we're gapping down. We call that a retest gap. So if you have a gap that is in the same direction as the last candle, so this was a bearish candle, this closed bearish, and we have another gap down, we call that a retest gap. So what we're expecting is we're expecting this thing, it gap down, and we're expecting at some point to come back and retest. Now, it may only retest this low of Friday, but it may come back and retest that 10 EMA strategy. So what we're looking for in this case is Apple is gapping down below Friday's candle, and it's clearing the low of Friday. So we're cleared to trade this as soon as the market opens. This 10 EMA strategy is really best after the first hour, but when something gaps like this and it clears the previous day's high, a low in this case, or high, if it was a white bullish candle, then we'd be cleared to trade it in the first 20 minutes. If it gaps or doesn't even do anything, if it stays what we call inside day, then what we do is we'll have to wait 20 minutes to trade it. And I'll show you how we're going to trade it here in a second. If it doesn't gap or it doesn't break out from the high or the low, which are those green lines, then we have to wait 1 hour. And like I said earlier, this 10 EMA strategy works a lot better after the first hour. So I know probably confusing. I know I'm throwing a lot at you, but we got the whole week to do this. We'll be trading this 10 EMA strategy all week long. I'll be here on today, Monday and Friday, and then we'll have some other moderators and coaches that will come in during Tuesday, Wednesday, and Thursday and be leading the show. So you can see the different looks and different teaching methods from each one of the moderators at Real Life Trading. So anyway, what we're doing is then we trade this 10 EMA strategy. Specifically, we trade it on the 3-minute candle. So you'll see right now we have a big old gap on Apple, right? We're gapping way down here to 160. So you'll see when the market opens, this 10 EMA strategy will come down. What we're waiting on is for us to get a retest of this 10 EMA line, big red line. You'll see this big red line come down. You'll see Apple and the rest of tickers, whether they go down or go up, but they'll come back to a certain point to that 10 EMA strategy. And then what we'll be looking for in this case is to take a low breakout of this 10 EMA retest. So say we get a black candle here, a bearish candle. And by the way, my white candles are bullish, my black candles are bearish. Some people use red and green. Other people use pink and yellow. I don't know, whatever color that you have, it doesn't matter. But anyway, for me, it's white is bullish and black is bearish. So we'll look for some bearish candles to probably come down. And then we'll look for a white candle or two to come back and retest that 10 EMA line. And then we'll look to take the breakout. So we'll look, something like this. If we have, a couple of candles come down and we got the 10 EMA coming down here, and then we got a white bullish candle, in this case, come back to retest, we'll look to take the breakout of the low and we'll put our stop up here somewhere above the 10 EMA strategy, and we'll take this down. And for this strategy, we look to take, and we use R's. Let me explain R's real quick here. Chris, the indicator, the red line is the 10 EMA. That's the 10 exponential line that you'll only see that on my charts when we're trading that strategy. I'll go bouncing back and forth, back and forth to all the other exponential moving averages. And I look at VWAP, which is the volume weighted average, but we predominantly trade off of this chart. And you're even going to see me go like this. And because our strategy says that we have to have pre-market data on, and it's got to do the exact same thing on pre-market as we do on extended hours. So here, let me show you this real quick. This is my extended hours chart. So you can see right now, Apple is actually above the 10 EMA strategy on pre-market data. So this is over the night. This is after market closes. And this is when the pre-market data starts again. So this is morning pre-market data. So you'll see on my chart, we'll be doing this a lot because in this strategy, it says we have to have the exact same parameters, criteria in order to take the trade. So here's a good example. So you can see in this case, we're getting a bunch of chop. So we're getting closes above and below, right? But what we're looking for is a nice trend. If this breaks down and gives us a bearish trend, we'll look for a white candle to come back and retest that 10 and take the low of that as our entry. And then we'll put our stop up here above that 10 EMA strategy. It'll come all clearer once I start doing it. Arafat says, sorry, and we are going bearish here because it gapped down. Well, potentially, yes, that's a good question. We're looking right now, we're looking at the gaps. They're gapping down. So what they're doing is they're causing a bunch of emotion and a bunch of momentum down in the bearish direction. If what happens though, Arafat, if you can see, like, let me get out of this split screen, and I'll have to go back and forth on this split screen all day. Let's go back to look at all the other EMAs. So I'll be switching back and forth here. So you can see we're gapping down here on Apple, right? But we're gapping right down to this 100 moving average. You can see here based on volume, and we look at volume primarily as one of the lead indicators of what's going on with the stocks. If you can see volume here, a lot of people bought here, not only once, right? Came down here, retested, but a bunch of people bought here really like 3 times. So one would think with this big moving average down here, a lot of people, a lot of bears are going to use this as their target, right? And any bears that are using this as their target are going to have to buy to close their position. And once they buy to close their position down here, we're probably going to see a nice bounce off of that 100. Does that make sense? So to answer your question is, we're predominantly looking right now for bearish trades because of these gaps down, which are causing momentum. But we also have to look at where all the bulls, where are they waiting? You know, if I'm looking to buy Apple, this is a great place to buy Apple, right? You can see a nice little bit of pullback retracement. Bunch of people bought here, you know, 2 or 3 times. So probably gonna potentially buy again. So we'll have to keep an eyeball on that, but great question. All right, so let me talk to you about our R's real quick. Our R's, we trade at Real Life Trading, we trade the same amount of risk for every trade, and we call that our R, right? And the way that you figure out your R, we teach that your R should be somewhere between 1% and 2% of your trading account. So if your trading account is, let's say, $10,000, right? Your R should be somewhere about $100. So what's that saying is you should risk the same amount every single trade. And the reason we do that is because it's been proven that a lot of traders, especially when they first start, they'll get in, kind of soft touch it, stick in their toe. They'll say, okay, I'm going to see if I'll buy like $50 worth, and then they'll win. And they'll say, okay, I got this down. And then they'll put in maybe $200 worth of stock on their next trade, and then they'll win. And then, maybe next one, they're feeling good, and they'll say, okay, I'm going to put in $500 on this next trade. And then they'll lose. So they'll have two wins, and they'll won, basically about $300. Or if they use their stops, like Real Life Trading advocates you use, especially in day trading and swing trading, then if they lose something big, they're going to wipe out their account, and they're going to have to start all over. So if you flip a coin 100 times, you're probably going to come out 50-50. But with trading, the way we trade is we mitigate our risk, right? So we want to always lose less than what we originally put in our trade for. So let me finish explaining your R real quick. But before I go on to explain that, so your R, if you're brand new beginning, I would say, you would probably risk, I always advocate somewhere between 50 and $100 for new traders on each trade, right? And what I need to do is I need to get rid of all these lines, and I'm getting ready to have the market open. So we'll have to probably continue this discussion after I get off of YouTube Live. But so just remember, your risk should somewhere be around 1% of your total trading account, right? And then you'll see that that's the amount that we're going to continue to use for all the trades this morning. I can tell you right now, my risk is $400. So I'll show you how we're going to figure out how many shares that we're going to buy. But my risk is every trade that I do, day trading, I risk $400. Okay. So again, the reason being is because I'll probably win half and I'll lose half. But the good thing about trading is you get to move your stop and mitigate your risk. And we'll show you how we do that in a little bit. So we always obviously try to win more than we lose. So we try to win in this strategy somewhere around 1.2 to 1.4 R, because if we continue to do that, and we get our stops in place, and on our losses, we lose less than an R, then you're going to end up being a positive trader, a consistent positive trader. And I'll show you how we do that as we go. So hope that makes sense to everybody. If it doesn't make sense right now, I'll explain it as we go, which will be a lot easier. But you'll hear us talking about R's. So that's the risk unit. And so if my risk unit is R, if I'm risking $400 on every trade, then you're going to hear some people say, well, I made an R. Well, that means in my case, if I make an R, I'm going to make $400. So you'll hear all week long us talking about R's, and it might not be very clear right now, but it will get clearer once that happens. But you can see, I'll refer back, like Arafat was talking about. I use my EMAs, all of my EMAs, to look where support and resistance are, because in this case, the bigger EMAs are going to cause some resistance down, or some support down here. And these EMAs up here, if we go long, are going to cause a little bit of resistance up here. All right, so let me just show you. We're back on the day. So you can see all these green tickers here mean that we're cleared to trade this right off the bat. So you'll see Apple is clearing the low of Friday. And I'll always forget to turn my brush off, so forgive me for that. You can see NVIDIA is gapping right down here to the 200. So that makes sense that it might be bouncing. Jill says, what time frame is this? If you look up here, Jill, on my chart, you'll see these are my minutes, and this is day. So right now I'm in the day. You can see the market's already open. So let me go ahead and close YouTube down, and that way we can say aloha to everybody. If you're not part of the Real Life Trading team, come visit us at reallifetrading.com. You can go there and register for free week and come trade with us for free. So do that, and then you'll be able to catch us trading the rest of the day. We'll be YouTube live all week long, but until we talk again,